Greg Williams. I'm the broker relationship manager. I've been at Helpside for 13 years. I started here on the sales team, worked for a year on the sales team, and then transitioned over to the director of client accounts. And so I manage the account management teams and customer service teams. That has now morphed into the HR team, kind of combined the account manager and the HR representative into the same role. So did that for about 10 or 11 years. And then when we made the decision to start a broker program, they asked if I would be interested in changing over after doing 11 years of open enrollment and trying to save clients and trying to understand value and why they would be with us and things that way. And so it felt like a really good fit to say, hey, now go tell brokers why companies are coming with us and why they should use us as another arrow in their quiver as they're out there trying to find the right solutions for small businesses. My core job function is to manage the broker program. So building relationships with brokerages and then working closely with our sales team to branch out and connect to the individual brokers so that we can increase our scale of, if every salesperson has 8 to 10 brokers that they work with, then it's just exponential in our reach for trying to find groups that we're the right fit for. I spend a lot of time networking. I love people, relationships. So I do a lot of things that put me around people that allow me to get to know people. I spend a lot of time on LinkedIn, searching websites and things to try to understand the landscape of the broker community, golf tournaments, those types of things. And then again, with our team, I try to meet with each business consultant on a regular basis to talk strategy around targeting new people, using their connections to try to maximize our ability to find the right partners that we align with to try to put out our message that we've got a really awesome solution for small businesses. My pitch is that we have a very unique offering, a very unique health offering that allows them to present something that's different, allows them to differentiate themselves from the competition and bring creative solutions to small businesses. The environment right now doesn't work well for a small business. If they go to the open market or the ACA community, they don't know anything about them and the rates are rough. And so the people that are finding success in the small business community are ones that are getting creative and finding solutions that find ways to level the playing field for these small groups so that they can compete for the best employees, very much like your large organizations can. So we've tried really hard to be very competitive in our compensation space. So what we've come to is that we will actually pay $50 per employee per month for every employee that comes onto our health plan. And then to try to make sure that we account for everyone, if our health plan is not the right fit for them, but the PEO model does work for them, we will pay 15% of the total administration fee of the group coming onto the PEO piece. And that's all in as long as they're a client of ours, we will pay those commissions to the brokers. In addition to the fact that we create a unique opportunity for small groups to save money, I am a strong believer that every small group should be with a PEO. There are all kinds of data out there that talk to the fact that small businesses that are with a PEO go out of business less, they thrive, that the support in the infrastructure is really, really important to the small business. And so I would argue that most of these groups need Helpside and they need a PEO. And what's unique about us is that we do that better than anybody, in my opinion, but we will also couple it with health insurance savings. We have amazing people. We have years and years and years of experience in every area. We're still local / regional. And so when someone partners with us, they're getting a dedicated payroll specialist, a dedicated HR specialist, all the things that they will need in their business. They'll have a personal relationship with someone that they work with. Our goal is to always be an extension of their business. And we hope that they feel that way. And so they don't call into an off-site call center, but they call someone that they know and have dealt with, and an HR manager or a payroll specialist that knows their company, knows what they're doing, knows the names of their employees, and it matters. What I feel like is really unique about the medical plan is that it is a partially self-funded medical plan. And it's partially self-funded because it is self-funded and owned and managed by Helpside, but we work with a reinsurer to make sure that it is stable and secure and things. So if we have large claims, they'll come in and take care of those. So when a group partners with us, they get all the advantages of self-funding, where we can underwrite the entire group, no matter the size, and evaluate the risk. And then, so they get those advantages, but then they also don't carry any of the risk. So on a really small group, if they had a self-funded plan, if they had a major claim, it would be really devastating to the plan, and rates would skyrocket, and it would blow up the whole plan. So because of the size of our group and then the makeup of the plan itself, we're able to give a small business the best of both worlds, where we're underwriting them and also it's insured. Our biggest objection in the broker space, because it's been the only thing they've been able to compete with us on, is the fact that we carve out the specialty medications on our health plan. The beauty of that, until it becomes an issue for you, is that it's a cost control. It's a direct cost control or cost containment, I guess, strategy. And so for the 2 or 3% of the people that actually have a specialty medication that would be excluded on our plan, by excluding those, we're able to save lots of money for the 97% and be an amazing option for groups to save on their health plan. Again, knowing that we're not going to be the right fit for every group, but when groups are, they fit in that and they don't have major problems that are excluded on our plan, we knock it out of the park for them. There's substantial savings and the ability to get really good insurance at a very affordable price. And I do think it's fair, this idea that small businesses with the cost of medical coverage have to get creative. And the best small business brokers out there are figuring out ways to get creative, whether it be, ICHRA plans or different things that are outside of the fully insured ACA coverage that groups literally cannot afford. So our offering is unique, creates some really advantages that allow a broker to have an additional option that, when it is the right fit, is just great, and gives a small business the ability to compete with a really large organization for the best employees, because they're offering a Fortune 500 type benefits package that everyone can afford, and that the small business owner doesn't have to contribute an insane amount that becomes unaffordable for them. So I think the ideal client that is going to thrive in the Helpside model as a broker, I think you can look at two main areas. One is groups that have a major pain point with their group health, which I would argue is probably all of them. It's become really unaffordable. So groups that need an affordable, quality health solution are an amazing fit for us. And the second thing that I would look for that are going to be a great fit for us are smaller groups that are in a growth mode and need support. So a small business owner that's wearing multiple hats. They're trying to take care of the payroll. They're trying to handle HR issues. We can provide the structure and the foundation for them to have the support that they need, that they can go out and grow their business and do the things that really matter, knowing that they've got the support and that they're in compliance. So those two things, the health being a pain point and being spread too thin, or not understanding how to navigate a growth mode, those groups are going to be an amazing fit with Helpside. There are two different strategies that we've been working. One is this idea of the larger brokerage, that all the brokers are out chasing the large companies. These small companies become almost more work than they're worth. We love partnering with those groups because the 25 and under, they are our bread and butter, right? They're the ones that need a PEO that we partner with. That's our ideal target. So the large brokers that are not interested in the work involved with what a small business needs for the profit they can make off of a small group are a great target for us. The other target is the small business specific broker that love the small business. They're really specialized in trying to find the right solutions to navigate all the difficulties that they face because of their size and things. So groups like Helpside, where we're pooling a bunch of people together to create size and doing some cost containment measures, make a lot of sense. And these small business brokers specialize in that. So our two strategies are really working with the bigger brokers that are trying to offload some of the work with the small group, and then those that that's what they do is they work the small broker, and we become a really good option as they're trying to find the right solution for them. Those are some of my biggest fears with the growth of our organization is how do we grow and keep those core values of relationship based, support, local differentiators and things like that. Like, how do we keep those core to what we're trying to do while navigating scale, growth, new markets, all the things that come in. And we've had this amazing pitch for all these years against all the big nationwide groups. If we heard a group was talking to them, it was just like, yes, we've got this, because they lose a lot of that in the growth. And so I love that we have a lot of people that have been here a really long time, that message and those core values are central to what everybody that's trying to scale and grow and create new opportunities, that we're not losing that as we make that journey. So a great example. So I've been here 13 years, and I'm not an old dog around here by any means. But a huge moment for me is, as a management team or a director's team, we often will read books and evaluate it. And one of the books that was suggested by our executives was a book called How Will You Measure Your Life, which is a book about balance, work-life balance, and how important it is that, that you're stable at home so that you can give it your all at work. But it's really counter to a lot of my experiences with other organizations, where if you worked an 80-hour week, that was awesome. And that was celebrated. And that's the greatest thing. And I knew I was at the right place when that was something that was brought up by the executive team was, hey, let's make sure that we're balanced and healthy in all the areas of our life, so that when we are here, we can give it 100% and go and not be, a slave to the job type of a thing. And I think that's why people work here for a really long time. I think in talking about, how instrumental PEOs can be in helping a company navigate growth and figuring out the infrastructure of an organization. About 13 years ago, I was a young salesperson, and I was called to a meeting in a basement apartment with 3 individuals. And it was the founders of Cotopaxi. And we talked through it and did it. And I remember them telling me, as we were going through it, they said, to give you an idea of what we're doing here, we hope to be very much like Patagonia. And I remember leaving that meeting thinking, okay, right? Like, good luck with that. Like, that's a pretty lofty goal. And over the next 5-6 years, they grew and they grew, and we worked with them, heavily from the HR and a cultural standpoint. And they were just every bit as successful as they had hoped to be, to the point where they grew to a size that, groups don't always stay with PEOs forever. And there's a point when it does make sense to start to bring HR in-house and do some things culturally and have divisions and things that way. And so they outgrew us, but it was such a fun journey to watch them become what they told me in a basement with 3 people they would become. Obviously, general compliance, again, as the brand grew, lots of employees. And so you graduate from 15 employees to 20, and now at 20 employees, COBRA laws come into effect. And at 50 now, you're an applicable large employer. And so things change there. And so we were always dealing with those types of things. And then one scenario that I remember is they started doing pop-up. So in the beginning, everything was online, and they started doing pop-up stores, and there were some HR and legal things that they had to work through to do that. And so we worked very closely with them on that. And every year at rate renewal, trying to look and say, okay, are you in the right spot for your medical plan, and providing the the best rates for your group. And every year we explored it and looked outside to make sure they were in the right spot. And again, stayed with us up until, the group was so large that it just made sense to bring everything in-house and have their own departments. One thing I do know from 11 years on going through rate renewals and open enrollment and groups navigating, their path is that we always wanted them to know that we're in the business of supporting them as long as we're the right fit. One of the things I always loved is that we don't lock people in to a 2-year contract or a 3-year contract. And really we just ask for a 30-day written notice if and when they decide that we're not the right fit for them. And I think that takes a lot of the walls down and allowed us to go in and I had a lot of scenarios where a group would call and say, we think it might be time to make a change. Can we start those conversations? And when we have that type of a relationship, it makes it really easy for everybody to put all their cards on a table. And when we're not trying to keep clients that shouldn't be with us, it makes it really easy to navigate through. And I know multiple companies that we did this process 3 or 4 years in a row, and for 3 or 4, we were still the right fit. And when we put everything on the table, they're like, yeah, I think we're still the right fit. And then eventually they said, no, I think it's time for us to move on. And we work really hard to move them on smoothly and things, because you never know what's going to happen. And obviously for 30 years, we built our business on referrals from happy clients. And so I think there are a lot of groups that left us because it was the right fit for them, and then sent people our way to say, you need to work with these guys, during this time. So we did have one specific instance where a large group that had multiple companies under the umbrella that were spread all around, and they made the choice to move on and do some things differently. And I got a call from the CEO about 3 months later saying, is it too late to come back? How would this work? Help me understand who you dealt with the most that was making that decision on our end. Almost like heads are going to roll. I need to know who spearheaded this type of a thing. But yeah, I think we probably have an average of 3 companies a year that leave, try something else, and come back, because the grass is not always greener. And again, one of the things I love is we support, if a group, we want to work with people that want to work with us. And so when we're the right fit, we feel like we bring a lot of value to an organization, whether it be through HR support, payroll support, risk management, or the benefits that we're able to offer. We bring a lot of value to groups, and work really hard from an account management and HR perspective to make sure they understand the value. And if that value's not there anymore, we make it really easy for them to move on to what is the right thing for their business. And I think that allows us to have really high retention. Groups, when they stay with us, stay for an average of 9 years. And so I think it is that approach that we want to work with groups that we're bringing value to, and work really hard to make sure that we are bringing that value. A lot of the things that create the advantage for a group to be on our health plan is this idea that the groups are performing relatively well and all in a similar boat. And so when a group falls out of that, we don't ask them to leave, but what will typically happen is that every year when we do our renewals, we check all of our rates against the open market. And so when when we see that a group is better off to be in the open market where they don't know exactly what's going on with the group, we are aware of that, and we will present that option to them, giving them the ability to say, hey, because of the uniqueness of our plan, it really works for a certain group. And when you're not, when you fall out of the parameters of that group, then we want you to be where you're best. And that actually also helps keep our health plan, or the groups in our health plan, healthy, and the rates low and the renewals low. And again, with all of our groups at renewal, no renewal increase is welcome. Right? So a 2 or 3% increase is insane. It's awesome. It still doesn't feel great for the company that gets it. And so we work really hard to have conversations to be as transparent as we possibly can to help them understand exactly what goes into that. And what it is very sophisticated underwriting that is looking at how much a group utilizes the plan and how much of the things that were happening would those things fold it or roll into the new year, right? If somebody crashed on their bike and had a bunch of medical bills, well, we're not going to worry about that as far as saying, okay, we need to get more next year to make sure we can pay the claims. But the beauty of our health plan is that it is not a major revenue center for our company. And so when we're trying to do rate renewals or underwrite a group, we're literally looking at how much premium do we need to bring in to make sure we can pay the claims. And then when groups perform well, it allows us to, it cushions things for the other people on the group and allows us to keep renewals very low, typically quite a bit lower than state and national averages that groups experience. The brand association that I think is really powerful is Built Bar, Built Brands. So the protein bars, I think they're very similar to a Cotopaxi in these groups that have done really well. That there's a huge challenge behind growth and trying to scale at the level they do, and both of those organizations did a lot of things right and had insane demand on their product, and so trying to grow at a level that allows you to keep up with the demand of your product without some expertise and some help is really difficult. And so I think Built Brands is one of those groups that we love to be associated with because of the name recognition and the solid brand that they are. But equally on their side, I think that they are probably really appreciative of the support and the structural foundational help that we've been able to provide while they're trying to navigate extreme growth.